Jake, before we get into those three-legged framework, I always love to talk about this with a lot of my students. I'm trying to tell them why multifamily is so powerful. I'm going to run through these really quick, Jake. Let me run through them real quick, and then I want you to chime in after I'm done with all five. Give me your thoughts on them. This is the five laws of wealth creation. I learned this from a mentor. Every business needs these five laws to be able to be powerful. And I stumbled upon it, and I said to myself, wow, this is multifamily. It just encapsulated all in these five. The first one is need. We spoke about the need, right? We need affordable housing. There is a need in the economy, in the market right now for our product. That's why we're booming. The second one is entry. Now, what does that mean? There is a high barrier to entry, believe it or not, in multifamily, because a lot of you guys on this call are probably saying to yourselves, I got to do single families, I got to do, fix and flips or duplexes. I can't get into 10 units to 20 units. Well, Jake and Gino are like, that's great. There's less people coming into the business. That means there's more profit in the business. Those little single family home flips, you're making 10 or 20 grand because the profit margins are so small because the barrier to entry is so much easier. The barrier to entry, unfortunately, in people's limiting beliefs, they think it's harder to get into, but it's not. We're going to show you how it's not.
It's a mindset, right, Gino?
That's right, Jake. Control is the third one. Now, Jake was talking off the call. He's got ADHD. He loves to have control. I don't want to put my money in Bitcoin right now because I can't control that asset. I don't want to put my money into Apple stock because all of a sudden Apple stock is doing something they shouldn't be doing. They're slowing down their iPhone 6. They're going to get sued, right? I don't have control over those assets, but I do have control over my properties. I can fire my property manager. I can raise my rents. I can refi. I can sell. There's control with that asset. Crucial. If you're running a business that is dependent upon YouTube advertising and YouTube revenue, what happens when YouTube blocks you? You have no control. You want to have control in an asset in a business. The fourth one is scale. This is one of the most powerful ones because if you can't scale your business and grow it, you're not going to make money. You have to the law of affection is to make millions, you have to serve millions. And this is what multifamily does. If you have 3 or 4 single family homes, unfortunately, you're only servicing 3 or 4 tenants. When you have 850 units, you're servicing 850 tenants. You can see the numbers building up. And the scalability also for us, we have that ability to actually cut our costs with that scale. The last one is time. Now, this is really crucial for any entrepreneur out there. They know that time is so valuable, you can't get it back. When we bought our first 25 unit property, we were actually able to hire a resident manager while we were working full time. As we got bigger, we were actually able to increase our payroll by hiring maintenance guys. We're not out there unclogging toilets. We're hiring people to do that. The time is crucial. So for multifamily, it was able to for us to hire all these people to help us with the business.
We talked about having a philosophical approach. Gino showed me this earlier this year, and this blew my mind. And I was like, this is multifamily 101. And it's the reason why it works. The time factor is it's so on your side because the tenants are paying down your mortgage, you're increasing the value, you're driving the NOI up, you're forcing the appreciation. So there's this spread of NOI that's growing over time. Mortgage is going down, rents are going up, and so the thing keeps becoming worth more and more, and time is on your side, right? You're in it to win it. You hang in there for the long term on these things. Sky is the limit. It's just an amazing thing that we've seen. And you talk about the need. Housing is a basic human need. People want to be more flexible now. They want to rent. There's more and more people renting, right? And if you buy in a good location, a lot of times it's going to be 5-10 miles away from you before someone can put a new complex up because there's nowhere to build, right? Unless they start demolishing stuff. So you're having like this recession resistant asset, and you're really insulating yourself in many cases. The control, I don't know which one of these is the most important to me. I love them all. I mean, the control Gino was talking about, that is so important, guys. If you're sick of having a boss breathing down your neck and you can get into these things and live life on your own terms, how can you put a value on that? How can you put a price on that? It's just maybe my favorite part to this, but this is the philosophical approach that you need to understand. You always say, understand why you're in a business, understand why you're getting into something. This is why I think multifamily more so than anything.
Jake, I'm going to throw a little golden nugget in there for everybody on the call right now. I had an epiphany about this also. I was wondering why so many small businesses failed, and I found out and I heard that people love to start a business that they're passionate about, but they don't follow these 5 laws. Let's say you're a martial artist and you love karate, you want to open up a studio. Well, does it follow these 5? It follows really none of them other than maybe the control. The need, is there really a need for another martial arts studio in your area? I don't know. There may not be. For the majority of them, I don't think there is, because there's so much. It's already saturated, right? The barrier to entry is pretty easy. Go down, open up an LLC, get a studio, spend a couple grand, you're in. The control, you do have control on it. You can control your business as far as what time you open, what time you close. But as far as having control over the population, you can't draw from that big of a radius.
The control,
right?
and the need, that's where that breaks down, right? The control and the need there. You're in control, but there may not be a need. That's right. Yeah.
And Jake, you can't scale it, right? How are you going to scale one martial arts studio? The majority of people can't scale that. They don't use technology to scale it. And the time, you're in that studio, you're teaching all the time. So that falls by the wayside. So guys, if you're going to start a business, don't always think about the thing you're most passionate about. Think about serving others. Think about creating value in the market. And that's why multifamily is such a popular and such a powerful asset to start.
I know we need to move on from this slide, but it's like this, guys. You're trading hours for dollars as a martial arts guy, right? The thing is, in multifamily, you have employees and you're making money while you sleep, right? The rents are coming in. Rent is due. Okay, you're not out there trading, your time for dollars. That's the passive piece of it that I think people need to get their head wrapped around. If you're flipping houses, right, you got to go out there, manage that contractor, etc. You're trading hours for dollars. Okay, this is not always that, right?
So this is why we invest in multifamily. We'll go through these real quick because we touched on some of them. The first one was Jake and I. We just wanted high yield. We wanted cash flow. We wanted 10% cash on cash return, and that's it. We'll be thrilled. High yield. That's what multifamily allows you to do. It's not an asset where you're going to buy a property and it's going to appreciate. Appreciation for us is the gravy. We're looking for high yield. We're looking for a great cash on cash return
on the front end.
The next one is the forced appreciation. We can control that appreciation. We're going to teach you how to increase your net operating income by increasing your income and decreasing your expenses. If you buy a 3-bedroom, 2-bath house in Houston, Texas, and the market's $250, guess what? Your property is worth $250. It's not based on the income approach. It's based on the comp approach. That's not what multifamily is all about. You can really force the appreciation. We're going to show you some of the numbers we had in here. We bought a property for $4 million back in February of 2014 through I would say excellent management on the property. The property is now grossing over $100,000 a month. It was doing $53,000 when we took over. The property is now worth $9 million. We've refied the property twice. We've pulled out, I think, almost $4 million on this one property. Why were we able to do that? Because we forced the appreciation on the property. We were able to control the property. Equity through leverage. I mean, how many assets out there can you buy for $1 million? Put $200,000 on, you have 80% leverage on there, and you control 100% of the benefits. Very, very, very few assets that you can do that with. That's how you explode your wealth. Next one is tax advantages. We could do an hour webinar just on the tax advantages through depreciation, through cost segregation. Look up cost segregation when you get off the call. Your mind is going to be blown. I haven't paid taxes the last 2 years, a little bit of self-employment tax, but other than that, we've got massive write-offs through our multifamily because we're able to accelerate the depreciation on these properties. Keep buying, keep getting the love, right, Jake?
And guys, it's only getting better, to be honest with you. So just enjoy that ride.
That's right. The hedge against inflation. Now, what does that mean? Listen, inflation's going up. Your rents are going to continue to go up with inflation because that's how it goes. Listen, we've been increasing rents 5% over the last 3 to 4 years. That might slow down. If inflation slows down, rents are going to slow down, but we're keeping up with inflation with our properties. Scalability, we talked about that. We love to be able to buy a property for 30 units, be able to go in there. Listen, our first property is 25 units. We were able to scale and buy a 36 unit right down the street. We were able to hire more people to work on the property. We were able to get better pricing with our landscaping because we had more people to actually work. We had more doors to actually go and take care of. So the scalability is really huge. The economies of scale, I guess that ties in with the scalability. We love to have 25 units in one location. So much easier. You go and you collect rent on one property. You're not running around to 25 different homes. You're not worried about 25 different roofs. You're not worried about 25 different driveways. We're not worried about 25 different boilers. It's all on one property. It's so much easier for you to scale your business that way.
But it also comes down to pricing, right? We have such
Yes.
buying power with the garbage company, for example, that we have this fixed rate pricing with the garbage company where it's no negotiation. We go in, we just add it on. We bought another property, okay, waste management coming out, our company coming in, and typically we're saving like 50% right off the jump on these garbage contracts because we have such buying power that we have fixed rate pricing with them, and they no more negotiating. They go in, they come and put it at the agreed upon price. Old company goes out, and from day one, we're cutting expenses.
The next one is the ability to improve your local community. This is one that we just stumbled upon. And like Jake said, able to give away. Listen, when you can create value and send out surveys to tenants and have tenants come back and say, listen, this place finally feels like home. That's a great feeling. I mean, it's not always just about making money. You're going to figure out in life when you can serve tenants, you're going to start making more money with that. And our ability to actually affect our local community was really powerful for me. It was really, I mean, like, I guess the cherry on top of the icing for me was really, really fantastic feeling.
You want to feel good about what you're doing, right? So you're going in there and you're making people's lives better and offering a product for value for value. It's really cool.
Yep. And refi and roll. This is a huge one. We're going to teach you how to refinance a property like we did with the forced appreciation, refi that property out tax free and roll that money into the next asset. Everyone's always saying, how do we get money for the next deal? How do we get it? Well, listen, we're going to teach you how to refi that money, roll it out, and use that money as a down payment for your next deal. And wealth creation. I mean, wealth creation is huge, guys. There's another golden nugget, Jake, I want to tell everybody. People are so enamored with transactions. We're all transaction junkies, right? We all want to get deals done. But, a little secret, transactions don't make you wealthy. They create a higher tax bracket for you, and it's a constant job. Equity makes you wealthy. You want to have equity in these multifamily properties like we do. That equity is only going to grow, and that's kind of how you're going to create wealth.
I can't stress this enough. The thing that's changed my life more than anything is not going out and trying to syndicate deals. It's getting, starting a little smaller than maybe you want to, getting equity, refining and rolling, getting more equity, getting into bigger deals, getting more equity. The equity is what makes you wealthy, guys. This is key.